Louisiana Small Business Loans, get approved for small business financing. Call 888-653-0124 today or click the link in the description to learn more. Louisiana Small Business Loans are an excellent way to get funding for your business. They are also a great option if you are looking to start a new business. If you are looking for a small business loan in Louisiana, you should consider applying at a local bank. Banks usually offer better rates than online lenders. However, there are certain advantages to using an online lender. Available through FEMA, allow borrowers to receive low-interest emergency assistance to cover losses caused by federally declared major disasters. EIDLs do not replace state or federal programs designed to assist victims of disasters but supplement them. Borrowers must meet free loans typically offer higher returns than conventional loans. The difference in rates will depend upon several factors, such as the loan's length, the collateral's cost, the quality of the collateral, and whether it's secured or unsecured debt. 6. The estimated costs associated with the project. Costs vary based on the nature of the project. Typical expenses include legal fees, engineering fees, construction materials, labor, insurance, taxes, permits, etc. Loan program partners and loan details regarding amounts needed. Loan amounts range between $25,000 and $10 million depending on the type of loan being considered. Most banks have minimum loan sizes ranging from $50,000 to $100,000. If you're looking for larger sums, check out microfinance institutions. MFIs specialize in providing smaller loans at lower interest rates. The loan agreement can be signed electronically using online banking services. You'll also find forms available online if you'd rather use paper copies. If you don't qualify for a traditional loan, consider taking advantage of other types of financing. These alternatives could help you finance projects without having to sell assets first. They include working capital financing. This method allows companies to borrow funds they already own. The loan repayments come directly off the value of the asset itself. Companies often take this approach when they need working capital to fund short-term needs. For example, a manufacturer who has just received a large order may decide to pay for some raw material upfront instead of waiting until after production begins. In addition, working capital financing provides flexibility because there's no obligation to make payments back over time. However, this option requires strong liquidity. Lease purchase. A lease purchase involves leasing commercial real estate that includes office space, retail stores, warehouses, industrial buildings, and more. Is made during the next 6 months. Commercial lending rates typically start around 6%. In most cases, lenders will charge a fee called points to cover administrative costs. Points aren't always required, but it depends on the size of the transaction and whether the borrower pays points as part of the application process. The lending officer with a commercial lending entity should explain all fees associated with the loan before signing the paperwork. Why online lenders offer better rates than local banks? An electronic loan application with online lenders offers better rates than local banks because they have access to more information on borrowers and can make decisions faster. They also don't require collateral like real estate that could be lost if the borrower defaults. This means there is less risk involved in lending to them. In addition, most of these companies specialize in making smaller amounts of larger loans to provide competitive interest rates. A merchant cash advance can help business owners experiencing a cash crunch. Eligibility criteria and eligibility scenarios vary depending on which lender offers these services in your area. The most common scenario involves companies operating for at least 1 year with negative working capital. In this case, lenders will often offer short-term solutions such as merchant cash advances up to $250,000. Automatic approval for cash flow issues. If you have been turned down in the past because of bad debt history, it can be difficult to obtain financing again. However, if you can prove that you have improved your financial situation and eliminated any negative factors on your credit report, most lenders will approve your application without hesitation. This automatic approval process has become more common as online lenders look at ways to improve customer service while still maintaining profitability. Assistance to business owners is available today. Call 888-653-0124 today or fill out the form below to speak with one of our brokers to learn more. All of your requirements. With a small business loan, however, things tend to run differently. Most lenders understand that running a successful business requires having enough funds to cover payroll, taxes, insurance, and other expenses. As long as you can demonstrate that you have sufficient assets to back up those claims, you shouldn't face too many problems when trying to secure a small business loan. Louisiana has several different types of lenders available to help with financing needs. The most common type of lender in this state is a commercial lending institution such as a bank or credit union. Online lenders also offer short-term and long-term loans ranging from $5,000 to millions of dollars depending on the company's size seeking funding. What credit score is needed for a small business loan? A small business owner can use any personal financing available to fund their company's growth and expansion. However, when it comes time to borrow funds, certain criteria are met before a lender approves a request. The most common types of funding include: business owners who have been operating successfully for at least 2 years should consider seeking out a line of credit with a reputable financial institution. A lower business credit score does not necessarily mean that they won't be accepted into a program like this. It simply means that they might require higher interest rates than someone with a better rating would. Businesses that have had some problems with late payments or missed deadlines in the past could benefit from using a revolving line of credit instead of a traditional term loan. These programs allow borrowers to make monthly repayments over a period of 12 months or longer.